This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. China's new coal output rate, hiked this week in the teeth of an energy crunch, puts it on pace to produce more of the fuel this year than ever before if the increase is sustained, according to Reuters calculations based on official Beijing data. That record level, just under 4 billion tons if new production rates are maintained until year-end, significantly raises potential to produce electricity in a country where most power is generated from coal, going some way to easing growth worries that have clouded over the world's No.2 economy. The surge in coal output comes just days before world leaders meet in Glasgow for the UN COP26 summit on climate change, accelerated by the large emissions caused by burning coal and other dirty fuels.
Indian refiners' crude oil throughput in September edged higher from the previous month. Government data showed on Friday, as refineries boosted output to meet surging demand. Refiners processed 4.45 million barrels per day, BPD, 18.21 million tons, of crude oil last month, up from the 4.36 million barrels of oil per day in August, which was the lowest in 10 months. Refiners have been boosting throughput in order to meet demand during the festive season. Demand is expected to increase compared to previous months, as people travel more during festivities, Refinitiv analyst Ahsan Ul-Haq said.
Moving on to the top news in the energy sector.
Oil traded just below multi-year highs on Friday with bullish sentiment about low supplies tamped by concerns from world leaders that demand disruptions from the COVID-19 pandemic may not be over. Brent crude futures rose 92 cents, or 1.1%, to settle at $85.53 a barrel. The benchmark, which touched a three-year high of $86.10 on Thursday, was up 1% in the week, its seventh weekly gain. U.S. West Texas Intermediate, WTI, crude futures gained $1.26, or 1.5%, to settle at $83.76 a barrel, not far off a seven-year high hit this week. The contract gained 1.7% on the week and was up for a ninth straight week.
Top executives from ExxonMobil Corp., BP America, Chevron Corp. And Shell Oil will testify on October 28 at a congressional hearing examining whether the fossil fuel industry led an effort to mislead the public and prevent action to curb climate change warming, a House panel said on Friday. Democratic lawmakers who called for the hearing, which is billed as exposing Big Oil's disinformation campaign to prevent climate action, have said they intend to model the high-profile event after congressional hearings on big tobacco firms, who misrepresented the health impacts of their products. The CEOs who will attend are ExxonMobil's Darren Woods, BP America's David Lawler, Chevron's Michael Wirth and Shell President Gretchen Watkins.
Next, we have the top news in metal markets.
The European Commission is holding talks with China to ease severe shortages of magnesium, it said on Friday, after industry groups warned of potential plant shutdowns that could hit millions of jobs. The Commission is aware of the current shortage of magnesium which is affecting global supply chains and is monitoring the situation closely, a Commission spokesperson told Reuters by email. China supplies about 95% of the bloc's demand for magnesium, a key ingredient in aluminium and steel, but shipments have dried up since September, a statement from industry groups said.
Copper prices extended their downward path on Friday, pressured by uncertainty over China's moves to dampen down coal prices and as speculators squared positions ahead of the weekend. Prices had rebounded in the morning on renewed worries about scarce supplies but later went into the red. Three-month copper on the London Metal Exchange, LME, had sunk 1.1% to $9,723 a ton by 16:25 GMT, adding to losses of 3.5% in the previous session. Metals prices slid on Thursday, partly because of intervention by China to cool surging coal prices. We will now look at the top news in the agricultural sector. China's soybean oil prices hit a near 10-year peak this week on tight supply and robust demand, lifting key soybean crushing margins to 6-month highs despite sustained weak demand for soy meal from China's battered hog sector. The most actively traded soybean oil futures on Dalian Commodity Exchange has climbed 30% since mid-June to hit 10,278 yuan, $1,606.09 per ton on Thursday, highest since October 2012, before edging down on Friday. Soyoil's rally has helped soybean crush margins in China's top soy processing hub Shandong rise to their strongest since March, and fully recover from their plunge to record lows in June due to weakening soy meal demand from loss-making hog producers.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.